What taxes will revocable trust beneficiaries typically have to pay upon distribution?
Well, the whole point of a say it for me. Revocable trust is what I call it.
Yep. Say revocable, revocable, whatever you want. The R trust.
The whole point behind that is the grantor, the person who actually funded that trust, is still technically the owner of those assets.
Yep.
So any income being generated under that trust is going to be taxable back to the grantor, not to the beneficiary.
That's called a grantor trust. Whenever you hear somebody say grantor trust versus non-grantor, what they're referring to, does the grantor get the income? And if it's a grantor trust, then they ignore it and they just treat it as you.
Right.
But now you're saying a trust beneficiary upon distribution. I think they're talking about when somebody dies.
So once somebody dies, it's no longer a revocable trust.
Now it's irrevocable, which means, is it a grantor trust? Well, they're not obtaining, they have no power over it anymore.
I've heard it's called a credit trust, an AB trust,
credit shelter.
Credit shelter. Yeah, there's 100 names for what it is now.
It's irrevocable. Nobody can change it, and the grantor is now deceased, which means it's a non-grantor trust, which means it's flowing to you. So if the trust makes money, generally speaking, it's distributing all the assets and the income to the beneficiaries, and the beneficiaries pay tax in proportion to the amount that they receive. If it's just sitting there as an irrevocable trust and it's not distributing anything, then the trust would pay tax on it. Or it could K1 out the beneficiaries.
Right. Some trusts are required to distribute their earnings, whether they have or whether they actually distribute or not. So at that point, what we call simple trust, the beneficiaries are being taxed on their earnings. The one exception is capital gains remain with that irrevocable trust. It's considered part of the corpus, the body of the trust. So until that is actually distributed out to the employees, the beneficiaries, the trust will continue to pay tax on it.
See, you guys ask a simple question, and unfortunately, there's always facts and circumstances. But generally speaking, if you don't want to pay tax on the trust level, distribute it out to the beneficiaries, and it's always going to be the beneficiaries who pay tax. If it is a revocable trust and you are the grantor and you're giving money to beneficiaries, that is called a gift. You are the beneficiary during your lifetime and you're just giving trust assets away, then you're just gifting, and you would pay tax on that, but they wouldn't pay anything on receiving that. If it's a grantor trust and it's your grantor trust, until it becomes irrevocable, until they become the beneficiaries, we're not worrying about tax to those recipients.
Right.